Smart Alec Show podcast.
Smart Alec Show, baby!
What do the common people need to be aware of and track when it comes to the markets and the economy? Like, what should they be following to just be informed citizens and know what's going on with the economy and what to do with their money?
That's a hard question, because I think for most people, this isn't going to be their passion. I think for most people that what they should know are, just a few basics that over time, as the economy grows, stocks become worth more. Now, that doesn't mean they're perfectly correlated or anything like that. Obviously last year during the pandemic, right, we had the market dropped significantly, but then the market started doing well, well before the economy recovered. But in the really big picture is that if you believe that the economy is going to be larger than it is now, 20 or 30 years from now, then you believe that stocks are going to be worth more, then the businesses are going to be worth more. A bigger economy, we have more profitable companies, we have higher stock prices. So I would say this, what you need to know is that, ultimately the economy drives the market over the long term. Number two, you need to realize that most active managers do not outperform the market. And so you don't need expensive money management. That you can index your money, and just meaning that you can buy something like SPY. It's an ETF that tracks the S&P 500, or there's an ETF that tracks a much broader measure of U.S. stocks and foreign stocks, and you want to have exposure to both. But I think one of the other really important things to know is that you really shouldn't time the market. Guessing when the market's going to go up or down, it's a fool's game. And you think about back, the market bottomed March 23rd of 2020 during the pandemic. I mean, the world looked like it was falling apart then, right? And the pandemic got much worse after that. But so the point is, if you took your money out and missed all that recovery, you're crying right now. And so timing the market is just hard.
It's hard. It's so hard. And I think I told you this a while back, how, it seemed like, we were doomed. The economy is going bad. All these companies are on the verge of bankruptcy. And I remember, betting that the market was going to keep tanking. And then boom, all of a sudden, a new bull market, Wall Street Journal comes out like a new bull market has begun. And I'm like, what is this propaganda, And then it never ended. And now we're seeing some, with all this inflation fear, now we're seeing the market kind of have some trouble this week. And, crypto, I know you have some thoughts on crypto crashing today, but yeah, it was crazy, man. I got burned right there. I took some serious gains when the market started tanking, and I had some, put options and things in place for like the restaurant industry and, airlines, gas, etc. But then when it recovered, I missed that wave. I missed that whole uptrend for a while there. So you can't time it.
One of the things that I would say is it's a lot easier to take your money out than it is to put it back in, because you have to put it back in when everyone's the most scared. And that's tough. And then, the market often recovers quickly. We had one or two really big days in March of last year. And then all of a sudden it's like, oh, I'm not going to put it in now. The market's up 10%, right? Or 15%. I mean, that's why it's such a hard game. But, I would say this to you that if you learn that lesson at your age, boy, you did yourself a great favor. And that's why you really want to get investing early, because you can't just trade on paper and get the same emotions like that pain you feel in, when you're losing money or missing out on money, on gains. There's nothing like it. And so, you've got to experience it. And, we all make mistakes. I'll tell you a quick story. You'll appreciate this. When I got out of law school, I started this small little investment partnership with these two other guys from law school. And we bought this stock, this one stock that we were sort of betting that this bank, it was on the Atlantic coast, was going to recover. And we bought the stock at like $7.50. And, again, no internet back then. This is like 1989, 90, sometime around then. And we I get to work, I guess it was 90 or 91. And so I get to work one day and I look in the paper and the stock is now $8.50, which, 7.5 to 8.5, that's a big move. And so a little bit later that morning, I call my broker again, nothing online, stock's at like 9.5. And, I said, like, is there any news? And they said, no news. And then at lunch, I called, it was like 10 or 10.5. And, I'm now thinking, okay, if this continues, I'm going to be retired. And a little after lunchtime, they had a news conference and they released news that they'd gotten rid of all these bad assets. And I think the stock closed, I could be wrong, like 12 that day, right? And the stock is called Mid-Atlantic.
You had a significant position in this stock?
No, we had no money. We were just out of law school. And so there's tiny amounts of money.
Gotcha.
But anyway, first of all, the lesson is clearly people were trading ahead of the news, right? I mean, clearly this news had leaked out and people were trading ahead of it. So that's a whole nother issue. But, we sold that stock, I don't know, maybe that next week or a couple weeks later, at like $14. And, we couldn't believe like what geniuses we were. And until a year later, when that company was taken over at $50, right? We had sold it like $14. And the point is that, that's how you learn, right? That it's like, you don't just sell, right when there's the initial good news. It's, that stock had a long way to run. And it did, even without the takeover. But, that's how you learn these lessons. I would have never learned that if I didn't, have that little bit of money invested there.
Yeah, you got to have skin in the game to learn it. And like I said, that there's something people really need to understand. Like, this is like an emotional roller coaster. There's some highs and there's some lows, but that's the game, right? You got to act rationally and leave those emotional, highs and lows out of it, and just, keep the boat steady. But,
yeah, I mean, behavioral finance.
Yeah, who knows where you would have been if you would have sold at 50, man? You would have been on
exactly. I could have hair right now. Behavioral finance, right? It's sort of what it's all about, sort of the combination of finance and psychology.
Don't be such a smart Alec.